Good morning. This is Jeff Scott, and this is my weekend review for 11/7/2021. I'm doing this on the road, so I won't have my usual microphone setup, which, considering it's had some issues of late, maybe that's not a bad thing. I also am sure entertaining the people at 6 a.m. in the hotel room, 7 a.m. next to me. Unfortunately, everybody got an extra hour of sleep last night as we spring forward and fall back. I titled today Markets Melt Up as we had a fairly ferocious rally. We'll take a look at the market, see if there's anything left, and what we expect to happen this week. As always, to reach out to me, hgsidoc@gmail.com. This is for educational purposes only. Anything I talk about is the spirit of education. It should not be considered investment advice. I'm a doctor, not a broker. I am independent. I don't work for any brokerage house, technology company except in healthcare, or software vendor. I paid for the tools that I use, and trading involves risk, and you alone are solely responsible for any decisions you make. I'm not going to spend much time here, but I call my investment style be your own guru, and by that I mean learn from smart people. Many of the people I've learned from are here. Develop your own style, perfect it, and print money. I own a lot of technology. I use a lot of different software tools, many of which are listed here. And if you check me out during the day, if I'm not working or on a Zoom call, you'll see TradeStation, Thinkorswim. You'll see indicator sets from Dr. K, Sager's Q Tools, John Person. You'll likely see wealth charts on one of my monitors as well, and HGSI and EdgeRater. The website for HGSI, which I'm not affiliated with, is here with this URL. Free 30-day trial, no credit cards. Investing strategies have hundreds of videos. If you're new to this and want some help using this, I have some videos. Stock patterns are cyclical, and if you had to ask me if we're in the Russell, it certainly feels like we broke out in a new buy, although we're already getting extended. And on the rest of the markets, I would almost cut the top off, and every time it looks like we're breaking out to new highs, we come back, and every time it looks like we're breaking down, we go up. So we broke out this week. Do we get extension, or do we revert to the norm and pull back into the lower parts of the channels? Now, I'm now somewhere between the left and the center. Seasonality is so much better. So I've started buying stocks and putting my cash to work and have eased my hedges. If we look at Friday, it's pretty much a sea of green. There are some red, but mostly green. Certainly the major indexes were all green. Let's take a look at the major markets. Now, the thing that impresses me the most on this daily chart is all-time high on the S&P, all-time high on the NASDAQ, all-time high on the Dow, all-time high on the Russell, all occurring on Friday. How can you be bearish in that setting? Now, of course, intraday we'll look at some reversals, and the markets have run a long way, and they don't just go up forever, and of course they're going to come down someday. So those are the reasons to be bearish. But right now, you've got to let the markets do what they're doing. And if you look at the Russell went sideways from February to now, and now they've broken out of the channel. That is a long period of building up energy in small stocks. Perhaps they're getting ready to lead. The VIX actually moved up on Friday, so a little bit of volatility, and the dollar had a reversal to the downside, which is probably good for stocks. Now, the dollar looks like it's had a big run, and it has. Certainly impacted gold on the way up. But if I look at a weekly chart, you can see the dollar is actually down in its pattern and failed at the 200 weekly moving average. No surprise, you'll see all-time highs on the weeklies. It's just an incredibly powerful market we're in right now. And I've learned a long time ago, it's hard to make money getting in front of a truck going 100 miles an hour. So ride the trend, but it's okay to be peeling off some profits. as the market goes higher and higher, or at least tightening your stops. We don't need to look at that one. Let's look at the expected move charts just to get a sense of what this market did. The S&P futures traded outside its expected move. Remember, the expected move is set by the market makers. It's the price of an at-the-money straddle, and it reflects their expectation of how much move you'll see in a single week. We know that about 80% of the time when I did my research, stocks closed within the expected move. So the S&P traded up every day after sort of a sideways day Monday and closed just outside the expected move. So market makers lost money. The NASDAQ, big move. Sideways Monday, big Tuesday, Wednesday, Thursday. Sideways Friday, closing way outside the expected move. The Dow came back in on the reversal. It came back during the day on Friday. The Russell just broke out on Monday and continued to go higher. This is a ferocious move, and perhaps there's some more to come. The VIX pulled back to the bottom of the expected move and bounced where you'd expect it to, and the dollar stayed within its expected move. So the expected moves were just show you how powerful the market was this week. And if we look at the long-term channels, isn't it interesting that the S&P is in the middle of its channel now? The Dow is not quite at the top of the channel, and it likes to reverse at the top of the channel. The NASDAQ just retook the channel, sort of. And look at the breakout on the Russell. Wow. Very, very exciting time. Now, what's going on underneath? I guess Powell signaled that inflation is going to taper or temper. I guess I shouldn't use the taper and tempering in the same sentence, but we expect the interest rates to moderate if inflation's truly going to ease, and you could see big pulls down. That helps a number of things, including technology. If we look at, out of order, okay. If we look at the indexes and their AD lines in white, the index, small stocks, not quite at an all-time high on the AD line, but shooting straight up with the index at all-time highs. You look at the larger stocks, index and AD line at all-time highs. You look at the NYSE AD line at all-time highs with the major market ETFs that are listed here, and you look at the bonds shooting up in the setting of lower interest rates. If we look at breadth, stocks above the 200, stocks above the 40, both moved up considerably, not at their maximum level. So I put strong approaching overbought. And the reason they're approaching overbought, on the 3-month new high, new low, you could see we're up near the top. Now, reversals occur when we get much higher than this. So one would expect us to be approaching an area that doesn't have to be a big reversal, but maybe a pause to refresh. The daily McClellan, I'm still waiting to see new highs on the McClellan with new highs and breakouts on the oscillator and the summation index. We haven't seen them yet on either the daily or the weekly. The buckets tell us how far this market has moved. We now have 79% of the stocks above the midline of their Bollinger Band in the S&P 1500. That's extremely bullish. And over 25% of the stocks are above their Bollinger Bands. Again, more signals that we could have some sideways moves or a small pullback at the beginning of the week or sometime this week as we get extended. I've also learned that markets can get more extended to the upside or downside than anybody expects them to. I would not expect a Hindenburg omen, and let me just point out 12% new highs on the NYSE, 10% new highs on the NASDAQ. Market tone, we look at the Woody indicator, which is decidedly bullish. If we look at the markets, look at the percent gain this week, and we just draw the line right here. That's over a 4% gain on the average stock. It was all over the place. It's hard to say what was winning. EPS rank, even stocks with no earnings, did well. Relative strength rank was good. And if we look here, the S&P was up about 2%. Pink. In orange, you've got the IBD indexes. You can see my stocks were up 2.43%. I have a lot of stocks, so I'm happy with that. My buy watch was up almost 4%, and you can see our keepers index was up 2.82%. Seasonality is improving. I just wanted to put this up here. I look at 1 month out, and I take only those stocks that have more than 8 up years and 3 or less down years. I look at the percent return over the next month, and then I take the percentage that won times the average return to give me a score. And you could see some of the ones like Chef Warehouse that's been up 9 out of 10 times for an average return of 15% over the next month. Restoration Hardware, 8 out of 9 times for a 14% return over the next month. Berry Group has been up 9 out of 9 times for a 10%. And on the downside, you can see a couple of stocks, including Turtle Beach, which has been down 8 out of 10 years for an average of 15%. Now, this is an edge rater. You don't have to go pay $5,000 for that seasonality tool. It's built in, and it's not as flexible, but it gives me a great picture of improving seasonality. So these would be all the stocks with more than 4% moves that had at least 8 up on the longs or 8 downs on the shorts and 3 on the opposite side. Now, this is a view that I play with from Sagar, and this is actually a meta stock. It looks at breadth on the Dow, the NASDAQ, the S&P 1500, the S&P 500, and then overall. And there's a lot here, like stocks above the 50, the 200, and the 50 days above the 200, and that shows the strength in the market. Although we still don't have a huge number of stocks 50 above the 200, everything has moved up. But what's most interesting, if I go over here, is the blue line, which is small cap versus large cap. And we can see that over the last couple of weeks, small caps have really made up lost gains. And then in this magenta line, growth versus value, you could see right now small cap growth is what's doing it, which is IBD 50-like stocks. Sector strength, mostly grain, which is great. And if we look at it, we can see that only 1 out of the 11 sectors in Q, which is sectors on the S&P 1500, only 1 was down. If you look over the last month, almost everything is up. Industry groups, 84% were positive on Friday, 92% over the last month. 76% stocks were up. Here is the intraday Q buckets, and you can see the shoot up in the buckets between Thursday and Friday. Just makes me think that a little bit of a reversal would not be a shocker. And again, it could be a sideways and a pause. All sectors were up on the last 5 days, and on the last 2 days, 10 out of 11. The only thing that wasn't up was healthcare. Now, if we look at the top sectors, again in Q, energy, real estate, industries come to the top. These are the industry groups. And it's interesting, when I look for undervalued stocks in the top 10 industry groups, all I got were a bunch of airlines. Now, I bought some Alaska Air, but you could see there's a number of them there. Canaries in the coal mine, the extended FANG. I know Booking has replaced Priceline. Someday I'll actually change that. But you could see we're sort of pausing to refresh at all-time highs, certainly more bullish looking than bearish. And here's our leaders index from the stock club, which I call the keepers because I picked which ones we were going to keep. And it was a great week. Now, Friday we had an intraday reversal. It's really more of a doji day, indecision day, but it just shows you the strength of the stocks in the leaders index. Speaking of the stock club, I do have one scheduled for November. It'll be November 16th at 7:30. Dr. Keith Wade from Seasonality Trader Pro will be on. He'll show his tools for seasonality, finding reversals, finding great stocks. He has tools for Thinkorswim or TradeStation. I've become friends with him over the last couple of years. He's got some good stuff, and he always offers a special deal to attendees. You'll find the registration link in a number of places. Here it is right here. Whoops, I'm sorry for doing that. It'll be under Show More on YouTube, and it will be in the email that I send out to the HGSI IO group. If you'd like to become part of that HGSI IO group, let me just tell you what you need to do. You just need to go to, and I should have done this before because I've been getting questions, whighgrowstock.com. I do not maintain a mailing list, but if you go to community user groups, actually not user groups, community forum, you can log on to the group, and if you're not a member, you can join the group. And this is where I send my emails once I've done the videos so people know that they exist. Hope to see you in about 10 days, 9 days. Here's the economic calendar. We got Powell speaking Monday or Tuesday, so that can move the market. There are other Fed heads during the week. You've got some auctions on Monday. On Tuesday, you've got PPI, more Fed heads speak. Wednesday, mortgages, CPI, jobless claims could be important. We've already got the monthly employment, so Friday doesn't look too bad. You do have sentiment and jolts. So it's Powell speaking, so I'd say it's a big week for news in that respect, although he certainly calmed the markets this past week. If we look at the earnings, it's a judgment call to hold stocks over earnings dates, and boy, did I get burned a couple times this week, to be honest with you. It's bad judgment to not know when your stock's earnings date is scheduled. So these are the major ones that we might talk about that have earnings this week. And I will call out PayPal. I know some people are into Clover. I'm not. Upstart, which has been just a great company. Palantir, which is a great story that just goes sideways. Affirm, which has been a great stock. But there's some names there that you might own. Be careful. Market thoughts. Markets melt up. Powell stoked the fires by saying no hurry to raise rates. October employment was stronger. Interest rates dropped when Powell said inflation should be less. Pfizer came up with a COVID pill, and earnings came out from a host of companies, which led to a big gain. I have a lot of NVIDIA, and I benefited for that. Rates fall on mixed economic news. Congress passed a structural infrastructure bill after the close. You would think that by now, all of that is factored into pricing, but I'm not convinced. I saw a number of stocks that would benefit from this on my review that were not out, that had not broken out yet. Russell, I saw broke out the channel, was up over 6%. Keepers new high. Most of the leaders are extended, or many are extended, but there are still some decent looking charts. I'll be selective on new purchases and have tightened stops on some of the runners like NVIDIA and Salesforce. All right, so that's my PowerPoint. Now let's take a look at the markets. Let's jump into TradeStation this time. Let's go to my market force dynamics and let's look at the NASDAQ. So first of all, we look at a number of things. We look at the Laguerre RSI. It's a secondary one, but it's in a buy. Person is in a buy. Weekly is in a buy. Monthly is in a buy. Check. That's good stuff. We then look at the color of the bar. Green, green, green. That's good stuff. We look at the position at the upper envelope. It can run that way, but it's starting to get extended. We look at the red dot here on the weekly, which is a sign of MACD divergence. Notice how we're getting higher and higher highs, but we can't even get positive on the MACD histogram. That's concerning. We come down here, the weekly bongo is green, and then we look and we're at 98% on the extended line. If you look back on the high jump, when we get to areas where we peak, the market rolls over. This is telling me we're the most extended, or we are, what's the right answer? 98% of the highest high going back to last year of the extension. And that's extension from the 17, the 50, and the 200-day moving average. The NASDAQ is stretched. I expect it to pull back. Now, pullbacks can be fierce and hard. They can also be shallow pullbacks, as we've seen for multiple times. I would expect a shallow pullback. If I look at the Dow futures, Everything's good. So just look down here. It's only at 58%. So even though it's at the top of its channel, it's not as extended. The S&P futures, again, they all are running up. Got the MACD divergence at 86, so it has a little bit to run. And then the Russell 2000 futures, short-term big move up, but it's not extended on the longer-term base. So the NASDAQ, watch out for it because it is showing evidence of extension. Now let's look in at the HGSI of the major indexes, and we're going to start here with the S&P 500. What I've done here, oh, just stop that already. If I look into Major Markets Plus 01 and I hit Warehouse View, I pull up the major market index, either ETFs or the index itself. I rank them. I could see strength in small cap transports, industrials, gold, interestingly, mid caps, Russell, IBD 50, up 2.5% on the week. So a growth stock, but really a balanced investor's opportunity. If I look at the chart on the S&P 500, it's a straight up over the last year. Let's make this a little bit easier to see. So we had a doji after a run up. If we look back, what happens when you get dojis? Sometimes nothing, okay? And sometimes they signal a top and a reversal. So it's an indecision day. And we're not totally at the top on the high jump. We look at the weekly, you can see how far we've gone. If I look at the Dow Jones Industrial Average, similar except it's a green doji. Looks great on the weekly. I'm just pointing out things to me that are going to help me make decisions. The Russell 2000, again, gapped up. What a brilliant move, and you can see the channel it's been in, that it's decisively broken out. Now, a retest of the top of the channel would not be a bad thing and wouldn't be unexpected either. Not extended. You want to see extension, let's look at the NASDAQ composite. And you could see, interestingly, the NASDAQ, which is the broader index, is not extended as nearly as much as the NASDAQ 100 Qs. So maybe what we're going to see is a broadening out of this rally and maybe a pause on the NASDAQ 100 stocks. If I look at the IBD 50 fund, you can see it had one of those midday reversals on Friday, up near the high for going back years. Okay, it was 26 in the March lows. And you could see that it was actually up 0.29% on Friday, even with the reversal. If small caps and growth do well, I'd expect the IBD 50 to continue to perform. What about the FANGs? This is the pure FANG index, and it too had a reversal on Friday. So although Friday was this massive day on small cap, maybe we're starting to see evidence of a shift into away from the large cap techs into the small cap growth. Or was it a one-day wonder? What hasn't been working is biotech, and I think the problem here is they ran up because of Moderna, Novavax, BioNTech, etc. And now that those are selling off, biotech is struggling. Now be careful, because IBB has different components than LABU. So they may actually look different, and they do look different here. And it has to do with one has Moderna and one has Novavax, I think. What else do we might want to look at? So let me go back to this. You can see bonds popped with rates going down. We already talked about that. Let's look at the dollar. Is the dollar breaking out? No, it actually had a reversal on Friday with a red candle high. But the dollar has been strong for the last many weeks, but it's still way down in its pattern. Now, with the dollar having a reversal day, did gold turn around? Wouldn't that be interesting? Gold actually broke out above its moving averages, 2 kahunas in a row, a pocket pivot, a mobile breakout from a squeeze, As I mentioned last week, I've got a position in Royal Gold. And perhaps you've got improvement in relative strength with the stock doing nothing, so some positive convergence. Gold miners, they're in here somewhere. They had Arctic gold miners. Here they are. Well below the 200, but a nice day on Friday as well. So, the markets perhaps are going through some changes here, but, except for the fact that we need a pause to refresh, especially on large cap tech, it's hard to be very bearish at all-time highs. Industry groups, I've got 174 with all-time highs. We have 65 groups up. Wrong one. And we have 11 down. Now, the problem with the 11 down is take a look at them. First of all, notice that over 5 days, they all were strong. In fact, consumer electronics were up. That's price change, not percent, so be careful with that. But one day, they were down a little bit, but they all were up a lot of points over the last 5. But biotech, large pharma, e-commerce, life sciences, specialty pharma, infrastructure, software, consumer electronics, private equity, telecom, and generic pharma, that's a list of high growth stocks. So high growth stocks eased. Some of the high growth stock industry groups eased on Friday. I look at 5-day down. I've got whoops, not correct. Obviously, I've got only 17. So on a long-term basis, most of my groups are probably up. 5-day up is 72. Yep. So let's look at the top 10 industry groups on the 2-day up. Number 1, semiconductor devices. Make sure your raw combo is ranked highest to lowest. If I right-click on semiconductors, I see number 1 is NVIDIA. As I said, I have a significant position, and I trailed up my stops, and I'm tempted to take some profits as this just had sort of a climactic run on Thursday. Earnings per share growth are less than the multiple. That also bothers me, but Kramer says you could buy it up to 2 times that. At least he used to say that. A couple of red candle highs. The first one didn't work. Stock is clearly extended, but what a winner NVIDIA has been. Look at this move here. Like the Russell, a sideways move for months and then a breakout. The next one in that group was Qualcomm. This is the one that had a Bible gap up on earnings Thursday, and probably too far gone for my taste. AMD, another great leader, also has moved a lot. And you can start telling they've moved a lot when you look up here at this green line here, which is the high jump, getting up near the top. Neophotonics, Bible gap up. So the problem with these is they've all had big runs except for Intel, and I don't want to buy Intel. So I'm looking for one that's cheap, and in AEC, I can't remember. There's one that may come, but I can't remember the symbol. So although semiconductors clearly are the leading group, doesn't mean there's a lot of buys. Now here's one that's running that I'm just tempted to, not this one, sorry about that. There you go. This is a beautiful one here. This is a small HGSI, an IBD growth stock, small stock. And this is one that I look to buy on a pullback. Got a few shares of it. I wish I had more. AEHR. If you looked a couple weeks ago, I've been talking about ON Semiconductor, and it popped. We talked about it last weekend too. I'd rather buy them here or here, not after the big move up. Although, Morales and Catcher did talk about how to buy viable gap ups. All right, next group is airlines. I mentioned that was what came up on Sager's. And you can see these are stocks that have been killed. Is this it? Are they ready to run, or is this just another fake out? Maybe this is it. Economy is improving. I traveled yesterday. I'm traveling today, and the plane was packed. This is United Airlines. Delta looks interesting, breaking above the 200. American Airlines, Southwest, less than the 200. JetBlue, less. The one I bought was Alaska Air, and it broke out as well. Still has to get above its 200-day moving average. Third group is home products. Bed Bath & Beyond, on mostly restructuring talk, almost doubled in one day. Then it gave back half of its gains. So this is a story stock, turnaround play, probably not my kind of place to be playing. Builders First Source, again, here was a day you had a mobile breakout from a squeeze, a pocket pivot, and a kahuna, but a Bible gap up the next day, probably on earnings. The problem with this time of year is it's tough to chase things for me after they break out. Exploration and production. Now, these might be getting ready to run again. EOG Resources, sideways move, and a little breakout on Friday. Mobile breakout from a squeeze, pocket pivot and a kahuna. This was the top group. Apache broke out. So ConocoPhillips, again, sideways move. Is it getting ready to run again? Great earnings per share growth. Small PEs comparatively, pays a dividend. This might be interesting here. I think energy will continue to run if the economies are improving. CPE broke out on earnings. I have a position in that one. Devon is one that's been a leader. So I think it's time to be playing again in this pool. I wouldn't go crazy because they're already a run up. But it's hard for me to ignore these earnings per share growth. And I can tell you this is one of the few trips into Dallas I've had where you see very little drilling, which means even with the high price of oil, I'm at a drug conference, so with the high price of oil, I'm not seeing drillers popping up in everybody's backyard. And I think that just tells you something about the fungibility of the supply. And if the supply gets constrained, there are people calling for oil of 200 a barrel. I think that's extreme, but you sure as heck want to be in some of these if that happens. Cruise lines, again, like airlines, they've had lots of starts and stops. Is this it? Are they ready? Probably more debt laden, to me, a little bit more risky. So I'm not a big fan, but Carnival, which means you should buy them. Royal Caribbean had a nice breakout. Norwegian. So if cruise lines are back, these probably have some room, but they took on a lot of debt during the COVID crisis. So it'll be interesting to see how that happens. Entertainment facilities, this is what I might be doing. If COVID is better, going to concerts and stuff and sporting events. You can see Live Nation gapped up on earnings here. Again, there are Bible gap up rules from Morales and Catcher that would tell you how to play this. And you could buy it at the top, at the open here, and have your stop either where it opened or where the low of the day on Friday. To me, that's too big of a stop risk right now in this market. I won't play AMC, and Cinemark actually looks kind of interesting here. Sideways move, breaking out, less of a meme stock than AMC, and maybe something to look at. Other hardware, which I think is printers, so you have got Synaptics here. Bible gap up, again, sideways move. Then in here, out of a squeeze, you have pocket pivots and a kahuna. Gave you an opportunity to buy, and now it's too late, in my opinion. Lumentum Holdings, Bible gap up. Now you got the printers, Stratasys, and then 3D. Not that exciting. Investment companies. So these are a mixed bag. These are some SPACs and others. Fisker is one of the EVs. Right now I'm playing Lucid and Tesla. Lottery.com, Grid Dynamics. This is an interesting looking chart, and maybe it's a benefit of the infrastructure bill, so it might be worthy of some research. It's got earnings per share growth. It's got revenue, small stock in the millions. Bible gap up from a base on Friday. Gave back over half of the gain, so that makes me a little bit nervous, but I probably would watch that one. And then the next one, Vertiv Holdings. Also an interesting looking chart. Don't love the fundies. Don't know anything about the company though. Semiconductor manufacturing, someone's got to hear all about the fabs needing to be made, the shortages. That should benefit in applied materials. And if you look at the weekly chart, you could almost argue that applied materials this week broke out of a horizontal resistance that had been going on since April, and that's got to be bullish. So this is one that if it's not in my buy watch list, I want to put it there. Now it's already broken out, so I'd be looking for pullbacks. It's hard for me to buy things that are already running, but they often give me another chance to get in. Lam Research, KLA is already running. And Taiwan's another one that looks interesting here. And I'm going to put Taiwan Semiconductor. Its earnings are out. It's laggard right now. Keep that in mind. Stalled at the 200 on Friday, but it's got a couple of pocket pivots and a kahuna in a very strong group. Worth watching, in my opinion. ASML has been a leader, expensive stock. Atamira, don't know anything about it. It's a small player with no revenue. But look at this breakout on Friday. Enough that I want to learn about that company. MKS I talked about a week ago. All right. Then consumer finance. I've heard negative things about Visa and MasterCard looking forward. Clearly it's in a downtrend. Hard for me to be buying it here. MasterCard the same way. Amex, not as bad. Amex is actually still in an uptrend. FIS. So these are, to me, are fallen angels and probably not things I want to play. All right, so that was the top 10 industry groups. Now let's take a look at my buy watch list. And I got a lot of them. So I'm not going to look at all of them today. I might just comment on a couple of them. Here, let's change this to, and oh, by the way, if it takes forever for this to come out, I apologize. It probably will take a long time for this to come out because of the simple reason that I got really crappy internet here. I also don't have my usual computer, so I'm looking for a specific view here. Let's see if this works. There we go. So you can get an idea of the industry groups. Now remember I said structural bill was passed after hours. Howmet Aerospace is an aircraft structural. This one, I believe on earnings, broke out on a pullback here. It's run some, but that looks like an interesting pattern to me. Biofuels continue to look strong. Green Plains is one of the leaders here, broke out here. Casino gaming, this is called bottom fishing. Whether you look at Wynn or Melco, which is a China play, it's like thinking if the industry is really better, they're off their bottom. Do you want a position? Lithium is strong. It's hard to get in now if you're not in, but I think because of the electric car boom, the lithium players will be interesting. I've got a number of infrastructure companies, a number of energy companies. Here's 3 infrastructure and constructions. MTZ looked interesting here. Yeah, I'd like to see it clear its 200, but I've gone sideways. Mobile breakout from the squeeze. Pocket pivot and kahuna, perhaps in anticipation of the structural bill being signed. One of my favorite holdings I've had this year has been Upstart. I bought it on before earnings last time because I didn't realize it was earnings. broke out, major run. It's now pulled back to the 50. Probably a high risk play because any stumble on earnings in a stock with this kind of multiple will be punished. But this is definitely one of the darlings of the market. You could potentially wait to earnings occur. I'm not sure I'd be chasing this thing into earnings. Draw a line here, and a breakout above that line, you want to be long. Is this just a flag in the setting of an uptrend? Could be. Lending Club is a similar company flagging as well. Earnings are already out. Look at the earnings per share growth, but these things come with a giant multiple. Now, again, if we see a infrastructure investment that we're hearing about, it should also benefit steel producers, which is why they're here. A couple other things that I liked on my review. Sally Beauty Holdings. No, I've never shopped there. But you could see it's been in a long-term downtrend. But look at the pop here. And if I want to just look at short-term, it's been bottoming. And you see a big jump up here. It's got to get above the 200. The weekly bongo changed. This one looked interesting from a chart pattern. We'll talk about that one. Anything else I want to tell you about? You can certainly stop this and do your own review. This is Floor. This is a respected infrastructure play, engineering company, breaking out probably on the news, but you look at the weekly, it really hasn't taken out the recent highs. Similar KBR, nice move on Friday, and that NASDAQ. So I think there's some interesting things there. Let's finish by going through the Keepers Index one more time, just to look at how our leaders are holding up. Now, I'd like to remind you of why we did this. We did this not because we wanted to find stocks to buy. We did this to take the leaders of the market with the knowledge that when the leaders start to roll over, it's probably time to get out of the market. So they have not rolled over. Let's make them alphabetical. This is the index of the leaders, and let's take a look at them one at a time. AMD, still doing well. Like many things, Friday gave back some. Look at the strong week. Still a leader. AEHR, we already mentioned. Affirm is like Unity, Affirm, and Upstart were three of the darlings of the last quarter. It's slowing down here. Look at the weekly. This is one that James Ropel loves, Affirm. Alphabet, I gave it leader status based upon the weekly. It's sort of doing sideways on the daily. Asana has been another look at this weekly move. This one is one of the ones pulling back some. Not broken. Team, again, look at the weekly move. This one's flagging here, maybe giving you another opportunity to enter if it breaks out of that. Avis Budget, well, this was good even before Friday. See the move up. And Avis Budget had a big jump because, well, earnings and crazy people. And then you could see it gave back some of the jump, now flagging. Blackstone, just one of the asset companies, private equities, great run, still looks fine. Camden Property Trust, if you want to REIT, still looks fine. I'm looking at the weeklies. Net Cloudflare, another great run, reversal on Friday, will be something to watch, but it has not broken. It got extended. What happens when you get extended? You do a pullback. Nothing wrong with that. Costco, still a leader. Datadog, Bible gap up on earnings. A leader became even a bigger leader. DigitalOcean Holdings, this one had good earnings, had a reversal on Friday, still a nice positive week, looking at the weekly. Encore Wire, sideways now, look at the weekly, still a very strong week. weekly chart. EPAM, again, reversal on Friday, still very strong. Gartner Group, again, it made it because of the weekly chart. All right. I mean, from where I'm at, 130 to 350 in a year, that's a leader. And it's a very slow move. Pulling back into its moving averages, maybe giving you a chance to get in. The market goes up. Generac is one of these earnings reversals. Crazy day on earnings, actually traded up at one point. Now it's down to the 50. Is that a good time to buy? Only if it holds. So Generac is one broken stock. Herc would be an infrastructure play, still a leader. Horizon Therapeutics pull back into the 50, reversed on the weekly. This is another one that looks like it could be breaking down, but with the doji bar on Friday may just be giving us a chance to get in. Hut 8 Mining, weekly, looks great, flagging on the daily. In mode, weekly looks great, flagging on the daily. And look what the stock does. It flags, it breaks out. It flags, it breaks out. It's flagging. What comes next? Here's the index, KKR, flagging, but still look at the weekly chart. Lattice broke out on the daily. It's a very strong stock. Life Storage, another one that looks like it's broken down, but I guess right now I just say it's flagging. That's a third weak one. Motorola Solutions, kind of going mostly sideways. The NASDAQ index, just look at the weekly, how strong it is. Right now, sort of flattening out. Netflix broke down this week, still above the 50. Again, is it giving us an opportunity to buy, or is it rolling over? And you can see the rollover on the weekly. NVIDIA, breakout to new highs. Old Dominion Freight Line, like many of the others, reversing on Friday. Olin Corp is on my list again this week. It's a leader. Tesla, what can you say? A little bit of a flag here. Look at the weekly chart. Clearly a leader until it's not. Union Pacific, pulling back after a big run-up. Not broken, just giving us a narrow pullback. Here's Unity Software, like Affirm, like Upstart, one of the big winners. Big move up, sideways here, something to watch. And then Zscaler still looks quite beautiful. So there's 3 or 4 of these that have rolled over. Again, what's the purpose here? The purpose here is to find stocks that have led this rally. And when this index starts to roll over hard, it'll probably do it before the major indexes and could give you a signal that it's time for you to get out of this market. On that note, again, I'm doing this from the road, so I don't know when this will post. I hope you have a great week, and we'll see you on the Stock Club. Bye, everybody.